Understanding the growth of the passive market in South Africa. Hello, I am Joanne Baumann. Joining me today is S&P Dow Jones Indices, Marius Baumann, Managing Director, Group Practice Lead, Smart Beta, S&P Dow Jones Indices, and Chris Rule, Head of Client Solutions at 10X Investments, for a closer look at how the passive market is evolving in South Africa and how custom indices are playing a growth in the region. Marius, Chris, so great to have you here today. Let's set the stage. Can you give us an overview of how South Africa's current passive investment landscape? Tell us more about it.
So South African passive market is still in I would describe it as its fledgling phase. It's only market share of around 9%. But what's good to unpack and understand is where it's come from. So not much more than 5 years ago, it was more like 3%. So the market share has grown substantially in the last 5 years. And that's come from a number of factors, but one is the adoption by intermediaries to use index building blocks within their total solutions. And that's really where we've seen the growth drive is through that particular adoption and use case for passive investing. So we think it's still got a long way to go. And we still think that indexation and passive investing deserves a much larger allocation within a total portfolio solution. And probably should be edging towards 20% in the next 5 years. So at least doubling, and that still pushes it way off the global growth that we've seen, where it's close on parity with active management.
Very exciting times for you guys as a business, if that is where you see the growth going. Marius, what are the major passive trends globally, and where does South Africa fit in?
So I think there's a common misconception that South Africa is different from the rest of the world. But the numbers don't support that. What we've seen from our S&P Dow Jones Indices scorecard for South Africa is that the market participants generally underperform the benchmarks consistently in the long term. They may outperform in the short term, but consistently long term they underperform. Now, there's the doubters, the passive doubters in South Africa might state that the market is a little too small or there's not enough market participants. But an index measures the performance of the market irrespective of the size and number of constituents or the liquidity in the space. For factor indexing specifically, we've seen that clients can hold single factors or multi-factor indices. Typically, they do very well. They outperform the benchmark. The risk to an investor is holding a single factor. They might miss out on cyclical fundamentals. And then that risk is hedged against a multi-factor index. And S&P Dow Jones Indices has both single-factor and multi-factor indices commonly used by the South Africa market participants in this market.
And when it comes to multi-factor investing in the South African context, how often is that rebalanced, and is it rules-based?
It is rules-based. It's typically rebalanced on a quarterly basis. It follows the underlying index. So you can have a multi-factor index that overlays the S&P 500, for example, and that will follow the underlying rebalancing schedule of the parent index.
Okay, so Chris, what do you see as the major investment trends in the SA region today?
So, the big driving trend at the moment is the liberalization of Reg 28, with offshore moving out to 45%. Now, what was very interesting in that shift is that the index houses were very well positioned to move all the way out to 45% immediately, because they're relying on a systematic approach to attaining their global exposure. Whereas a lot of our active peers didn't have the necessary capability in-house to satisfy the requirements of the shifting Reg 28. And that goes across asset classes. So I'm not just talking about equity heavy strategies, fixed income capabilities, credit capabilities, and so forth. And that's the big systematic shift that's happening in our market at the moment, which is kind of across the category. The other piece, which is very interesting, is the use case and application of indices within solutions. And what we're seeing a trend towards is custom indexes being built as fit for purpose tools to be used by either networks of advisors or multi-managers, and being managed and run by a passive house in collaboration with S&P Dow Jones, and then inserted into their tool set. And that customization, that idea that an intermediary can build an exact fit for purpose product or solution, is something that's starting to have a significant tailwinds in our market, and we're certainly seeing the application used across the board.
Marius, Chris just alluded to custom indexation in the South African region. Tell us more about how that works and what's happening in that space.
So as the trend from active to passive really accelerates, the democratization of clients creating their own indices has followed suit. At S&P Dow Jones Indices, we have the ability to expose our capabilities, our infrastructure, our technology, and our data to allow clients like 10x to create their own indices using our platforms and using the same architecture that calculates the S&P 500 and the Dow Jones Industrial Average. So to take, for example, 10x, they've created a franchise of South African property indices, as well as their flagship top 60 South African index, where they design their own methodology, they design their own research based on how they define that theme. And they came to us as to the third-party independent calculation agent, which we basically allow them to use our capabilities and bring an index to market in a transparent and independent way.
Chris, 10x uses S&P's custom capabilities, as Marius was alluding to. Can you talk to the use about why you've gone the custom route? And kind of maybe just like really make it basic and like why is it working? Tell us about market participants, why they're enjoying this, and how is S&P in the backbone of this helping you?
So we've gone the custom route in many instances where we are actually serving a particular channel. We're serving an intermediary channel in the main. And that intermediary has a very particular view on how they would like to construct, say, equity or say bonds. That may be as a core allocation, it also may be as a satellite allocation to complement their existing asset allocation and investment process. And they might find that there's not something on the shelf that's available that suits that particular need. It's in that instance where custom indices really play an important role. An example would be a recent custom index development we've done with S&P is a particular manager had a view of large cap, how they defined large cap and small cap. And so we put together that very specific definition with diversification rules that suited their in-house process and with efficiency rules in terms of turnover and so forth. And we actually designed those particular funds precisely for their need. And that's where the application is. It's not a give up. It's not a compromise. It's we can actually build exactly what you want as an investment house. If you have the scale and you have the capabilities, then we can plug that into your investment process. The benefit, of course, of using an index alongside the asset management component is the corporate governance framework where the client can hold us accountable as to whether we're implementing the strategy in line with the index and whether we're tracking the index efficiently. And so that's where the triangular nature of it, index house, asset manager, and client comes in, and that's the neat fit for custom indices as opposed to a simple segregated mandate, for example.
Is there a certain size that makes sense to do this? If someone's asking you for a custom solution, is there a certain minimum that they need to put in?
It is a scale game for sure, and it's typically driven by the costs associated with it. It depends, though. It depends on how complex the strategy is, how many securities are in the strategy, so on and so forth. So customization, we typically talk about looking from 500 million and up. That's where customization starts to play a role. And there's no doubt that, to seed an investment with 500 million from day one is problematic, and can be challenging. And so we would say on day one, somewhere around 200 million would typically make sense for, let's say, a simple SA equity custom solution.
Okay. Guys, to wrap up the session, it would be interesting to understand what other indices trends might be on the horizon for South Africa based on what you're seeing globally. So I don't know who wants to answer this question, or maybe you both. So maybe Chris, maybe we'll start with you, Marius.
Sure.
What trends you're seeing, and then Chris, if you can maybe just end off with trends you're seeing.
Okay, so with the traditional asset classes like equities, the matrix is really a theme that resonates with market participants. We've seen the transition from fossil fuels to clean energy as a theme, as well as AI. And it's not just AI as we kind of know it, it's the way that AI is now embedded into business processes and how they can become much more efficient. So S&P Global has developed the S&P Dow Jones Indices Global Kensho AI-enabled index, which really selects stocks that is breaking new ground in the AI space. In dividends, 2022 had a strong year of flows and positive growth in dividends. 2023 held those positive flows. In 2024, as we see interest rates coming down, we expect market participants to look for income-generating themes again. And S&P is well placed with the Aristocrats Dividend Index franchise, which looks at stocks that pay increasing dividends year on year for the last 20 years, as well as the Monarchs Index, which looks at paying dividends for the last 50 years. And I'm pleased to say that S&P Global has recently been added to that exclusive club of the S&P Dow Jones Indices Monarchs Index.
And just on the dividend one, how does share buybacks fit into that? Or is that a separate index? Or is that part of the dividend index?
It is part of it. It's a different methodology, but that can be overlaid onto different concepts or different indices.
And then just the AI one, because at the moment that's very much flavor of the month. Everybody wants to talk about it. How are you finding these new stocks that nobody else seems to find, or is everyone struggling to find?
So
or maybe just explain the methodology a little bit clearer.
Sure. So we have a tool called Kensha, which is a natural language processing tool.
Okay.
And it has the ability to go and scrape data from annual reports, from SEC filings, or from other regulatory filings. So you can point the machine to search for keywords where a company is generating revenue. So we look at the entire supply chain of where AI is being generated from, and we can identify those companies that generate AI in this space.
That's very exciting. Chris, I don't know how you beat this, but what other trends are you seeing?
I think our trend is going to be from an asset management perspective, where we're seeing, with liberalizing Reg 28, the requirement for offshore exposure, and a lot of uncertainty around very expensive US valuations. So what clients are looking for is alternatives to simple market cap. And Marius mentioned the Dividend Aristocrats methodology. That's a methodology we're running, and we're seeing clients using that as a complement to their typical global index allocation. So we see clients looking for equity allocations that are not market cap based, that are likely to perform through the cycle. And interestingly, we're seeing the requirement for credit exposures. And Marius mentioned the credit indices that they have available, the investment grade and the high yield credit index, where you can get a highly diversified basket of credit, where you remove single counterparty risk and you get efficient access to credit, which is very difficult as an asset class to manage from Cape Town, from Johannesburg. So the application of credit indices, I think, is going to be something that grows through the cycle as credit becomes more attractive, at a spread and valuations level.
Chris, the credit space is a very exciting space, but historically people have been concerned about liquidity risk. How do you avoid that within these indices?
So typically we package the exposure up as a derivative, so as a CDS, with the banks, which is a liquid tradable derivative on top of the exposure.
So there's no issue with liquidity. Clients can come in and out. Fantastic. Gentlemen, I've learned an awful lot today, and I'm particularly interested in the AI one. I'm going to do some homework on that. Thank you very much. To learn more about S&P's custom solutions, visit us at the link below on the screen.